Gold is climbing once again. Headlines point to inflation, some blame conflict, others mention uncertainty, but these are only the surface. The real narrative begins beneath the surface. Whenever faith in paper money fades, gold silently takes a step forward. Not because gold transformed, but because the system shifted. In recent years, governments printed money at historic levels. Debt surged, interest rates spiked, and confidence slowly wore away. When people stopped believing promises, they searched for certainty. Gold is not a promise. It isn't someone else's obligation. It doesn't rely on policy choices or political calm. That's why central banks are defensive mode of gold faster than they have in decades. Not traders, not speculators, central banks. They aren't chasing returns. They're positioning for risk. This is where most people lose the thread. They assume gold rises because conditions are bad. In truth, gold rises when confidence quietly exits the room. If you're only watching price charts, you're already behind. The signal appears earlier, in actions, not headlines. Here's the part many fail to grasp. Gold isn't rising because it suddenly gained utility. It's rising because trust is breaking down. When inflation lingers, cash steadily loses strength. When rates swing, markets grow fragile. And when governments print solutions, confidence thins. In times like these, investors don't seek expansion. They seek shelter. Gold generates no cash flow. It pays no dividends. Yet uncertainty drives demand higher. Why? Because gold is one of the few assets that exist beyond the system. No central bank can create it. No government can multiply it with policy. That's why gold often moves before crises dominate the news. It responds to fear early, long before most notice. And that's why many misunderstand the move. They think gold is reacting now. In reality, it's reacting to what comes next. If this feels uncomfortable, that's intentional. Markets move on expectation, not ease. Here's the part rarely considered. Gold isn't rising because it became more useful. It's rising because trust is declining. Trust in currencies, trust in governments, trust in long-term commitments. Every time inflation shocks markets, every time debt quietly expands, every time central banks say this is temporary, gold doesn't panic. It simply absorbs the anxiety. That's why gold performs best when confidence is weak, not when optimism dominates. It isn't a growth play. It's a hedge against lost trust. And this is where many still miss the message. They ask, is this the right moment to buy gold? That's not the real question. The real question is, what is gold revealing about the system today? Because when gold rises alongside stocks, property, and crypto, it isn't signaling opportunity, it's signaling instability beneath the surface. On this channel, we don't chase hype or price calls. We study what assets disclose about the system itself. If you want to understand money beyond headlines and charts, you're exactly where you belong.